We have the rand trading 6.97 this morning, though yesterday touching 6.92, and obviously the strong rand, one of the factors that led to that better than expected inflation number yesterday.
Yeah, good morning, Stephen. Absolutely. I think the CPI figures just encourage the rate doves out there, keeping that door open for possibly another interest rate cut later this year. And of course, another interest rate cut would give those bondholders appreciation from a capital perspective, and also we saw some a nice rally on the stock market. And I think at the end of the day, that's what's really driving this currency, isn't it? And that is the portfolio inflows that have been coming into South Africa. Mostly it's been bonds, but there's no reason to believe why we can't see more equity inflows coming through over the coming months, especially if the monetary conditions become more accommodative.
Well, how do you balance those inflation numbers yesterday with the private sector credit numbers out this morning, which were a little bit higher than expected, 2.98% growth in August, but there were some technical factors included there which really inflated it?
There were some technical factors, and I think the bottom line there is as well that credit demand remains pretty soggy. We saw some improvements in the mortgage advances category, which was welcomed, but really credit demand is not shooting the lights out by any stretch of the imagination, and I don't think it really detracts from the possibility, as I say, of another interest rate cut. I think we've got to watch and see what happens to numbers like the employment figures that we saw, the GDPs, and the consumer inflation rate. I think those are going to be the ones that the Reserve Bank is going to be particularly watching. Of course, obviously what's happening to the manufacturing sector, and again feeding through to the employment prospects of South Africa. They've got to take cognizance of the growth dynamic, especially in the strong rand environment.
Well, going forward to today, we've also got a PPI out at 11:30. We have the trade balance out. So quite a busy day. What's your expectations on those fronts?
Well, on the PPI, we're expecting 7.9%, so that kind of flat on a year-on-year basis on the month. Really, PPI, the feed through into CPI, not as strong as it used to be. We would expect PPI to be contained to the top side in the strong rand environment, but it really comes down to how much producers actually pass on to the consumer. At this stage of the game, I think their power is fairly limited, given that consumer demand is relatively weak. So I don't think they're going to be passing on higher costs, and especially, as I say, with a strong rand environment, they could probably import certain goods and items a lot cheaper. So a deflationary trend could start picking up there in PPI. In terms of the trade balance, that of course always a volatile number, but again, I don't think that's at the forefront of the minds of the rand participants out there. We saw a very nice current account deficit reading last week, and if anything, the deficit on the trade balance this afternoon is going to probably be quite minuscule. We're still seeing some strong demand for our commodities coming out of the Asian region, despite the strong rand. So I think the trade balance probably going to be a fairly encouraging number from a balance of payments perspective, but as I say, not really on the radar screen in terms of the rand. I think the rand is just watching these portfolio inflows. That's the key.
Government's also releasing its finance figures today. What would you be looking for in those numbers, and what are the implications of them?
Well, there's a number that I think is worth watching a bit more closely, because obviously at the moment there's a lot of lingering concerns about fiscal situations globally, particularly in Europe and the States. And in South Africa's case, we're hoping to see that the budget figures suggest that the budget deficit for this year is going to undershoot original expectations, and of course that would be good for the bond market again, and in turn the rand, because if revenue collections are proving better than expected, then perhaps the issuance of bonds will be a little bit less than was originally anticipated, and as a result, from a supply dynamic, your bonds offer a little bit more value. So I think that is a number to watch, and I also think this afternoon we've got some US GDP and some comments from Fed Chairman Bernanke. Those are the kind of numbers that I'm going to be watching for the rest of this day.